is you just you can backtest this, you can backtest it, you can if you're able to backtest, you can backtest, you see your win rate. I think there was one time I told you guys go let's say pick a particular pair, pick up a particular pair. You can choose which pair you want to always you like trading, let's say gold or GBP USD, right? You go, you start from the beginning, you start from January, you backtest, like start from January, look for all the trades using this same strategy. You understand? Look for all the trades. And you take the trades, like be able to like let's say play out the trade and you see which trade play out. You understand? And you calculate in like in January, if I traded this strategy in January on this particular pair, you understand what's going to be my win rate? That's what you should always sit to do. Whenever you have a new strategy, whenever you come across a new strategy you want to really master, right? Let's say you've already gotten the concepts and everything. Go on your trading view, be able to backtest from choose a particular month, choose like 2 months back, 3 months or 5 months back. I told you guys one time, start from January. Start look at the price action. Look at what price is doing to the present date. You're able to calculate all those stuff yourself. You understand? You're able to calculate these other stuff yourself. And I have just one principle when it comes to for me flipping accounts and making I can make much money using a small amount of money when I want to trade because what I do is if I have $1,000, right, I won't just take all that $1,000 and I'll place it into my MT5 and I start trading. No. What do I always do is I divide it by 10. You understand? That's $100 and I put it into different accounts. So let's say if I have just one account, I'm going to be depositing just 10, just $100 each. What am I going to do? I want to look for 10 solid setups. You get if you want to trade Forex, trade it with wisdom, reason it out. You understand? Reason it out, treat it like a business. You don't just come, you open your chat and you want to start trading anytime. No. You have to come with your calculated risk. So let's say if I come and I have my $100 and I have 10 setups for those 10 accounts, right? What do I do? The first setup, let's say if I have it on GU, I'm risking $100. That's I'm going full margin on that $100. And how do you risk? Let's say if you have $100 on MT5, how do you risk? If you have $100 on MT5, what you're going to have is there's always the equity and all those stuffs on MT5. Let me see on my MT5. There's always the margin, there's always the free margin, there's always the equity. We have the balance. The balance is where you see the amount of money you have in your account, while the equity is where you see uh why the equity is where you see the profit or the losses you've made is going to be calculated and shown on your equity. Why the margin, it simply shows how much money you've used in that particular trade. Why the free margin is how much money is left, how much volume is left. Margin is how much volume is you have used. Margin is how much volume you have used. Why? Free margin is how much volume is left. So if you say you have $100 and you start stacking your positions, and let's say you start seeing your margin is at 50, means you have used 50% of that account. You understand? And you're left with just 50%. Are you with me? You're left with just 50%. So at times I always just end at that level. Sometimes I may stack until you see my margin is left with 20%. That means I've used more than that means the slightest drawdown, I'm losing that account. Okay, so whenever you're trading, you're trying to go in or always look at your margin and your free margin. Your free margin is what's left, and your margin is what's actually you've used already. So whenever I start stacking now, let's say I may stack and I'm left just with my margin is my free margin is just $10. You understand? It increase when you're making profit and it reduce when you're making losses. So if I lost that $100, I have no problem because I have 900 left. You understand? And I'm never going to lose 10 trades in a row. I'm never going to lose even 5 trades out of 10 trades in a row. Never. I'll never do that because I'm not in a haste to trade. I don't trade every day. I don't trade every day. In a week I can trade like 3 times. In a week I can trade like 3 times. Sometimes I just allow the setups. I don't take the setups. I just analyze and I leave it. I save it and I send to my safe messages on Telegram. I just come and I watch it when it has played out already. I don't take all my trades because it's pointless taking all. It's actually pointless. You understand? So most of the time I'll come. If I'm to take that trade, for instance, if I lose, I know I have $900 left. I'm going to the next setup, not on that same setup. I just leave that setup alone. If you like, continues it continues going in losses, or you like if it goes my direction, I don't have a problem with that. I look for the next setup. I risk the next $100. If I risk full margin and that $100, I always have a very very high risk to reward. If I let's say I have a risk reward, let's say for instance I have 40 risk reward, I'm going to take that $100 to $3,000, and I've already made more than my capital I brought in the market. Yeah, I've already made more than that capital. If let's say I lose that $100, I have $800 again left. So that's just how you manage your risk. Risk management is not by using it's not by trading with the smaller lot size on the big account. No, that's not risk management. Risk management is to be able to manage your money. It's called money management. You understand? Risk management is not to be able to manage your money. If let's say you have $10, you can manage that $10 to grow it without losing it. I hope what I'm saying makes sense. If you have any other question, you can ask.
Yes. I have another question. I want to know if what you're saying makes sense. Absolutely. I want to know when you go down to the lower time frame to confirm your open close, right?
Yes,
You're looking for SNR.
yes.
When you see that SNR, do you use that to set your stop loss, or it's just for confirmation only?
All right. So for instance,
Hmm.
let's say that's a good question. For instance, let's say if I have an open close like this, it's an open close. Let me draw it. How many trades I take per day? Per day, I can take one trade. It depends on the trades I see. If it's high probable, I'll take it. If it's not high probable, I won't take it. So yes, it is an open close on 1 hour time frame. Let's mark it out. For instance, like this. Let's mark this on 1 hour time frame, right? What am I
Right.
looking for? I'll go on lower time frame and let's say I spot an SNR at this level. That's this will only work when you're broken structure, right? This will only work when you have broken structure somewhere around here. You know your direction is bullish. This will only work at that time. Sometimes you have liquidity, sometimes you don't have liquidity here. You understand? This will only work when you have a break of structure and you've started your storyline and everything. So if price comes to this point here, this is an SNR here. Depending on the type of SNR too, this is an SNR. If I'm stepping in at this point, let's see if I'm placing my entry at exact SNR point, for instance, here, I always want to place my stop loss at the next support zone below this. Suppose I'll place my stop loss at the next support zone below this. You get, and
Yeah.
but again, one thing you should understand is placing this stuff. This is just a drawing. You understand? This is just an image you're putting. Doesn't determine. That's why if you place here and let's say price comes and do something like this, price comes here and mhm, price comes and do something here like this, comes and goes up like this. You didn't lose the trade. It's still valid. You didn't lose that trade. It's still
Yeah.
valid. This is just an image. This is just an image. You understand? So no day, nobody ever brought that law that you should enter exactly when price comes in. This one is just we call it we call it here show. You understand? This is just show.
Hmm.
You want to just show off.
Right.
Yeah, you just want price to come exactly your entry, tap and go. Nobody's perfect. You
But
understand?
how would you know though? Because okay, the thing is, I know maybe I haven't watched all the videos that you uploaded on Telegram,
Yeah.
but I've heard in one of your videos where you mentioned to set a 30 pips stop loss, and then
Yes.
in some of your videos it's like 10 pips, some is like 15. So
No,
for these
highest
trades,
max 30 pips stop loss is
right,
always safer. 30 pips. Always
right.
safer.
Okay. So it's best if you don't know where to set your stop loss,
If you don't know where to
you
stay your stop
can
loss, use 30
use
pips.
30. Okay,
Yes.
makes sense. Makes sense. Then in these videos that you're explaining to us, I know if it's not too much to ask, could you also like go down to the point where you set your stop loss and also just let us know why you took your stop loss at this point? You know what I mean? So we would also understand how your understanding or what makes you say how you set your stop loss basically, right? That kind of stuff.
All right, no problem. I always do
All
that.
right.
I always show you guys why I'm setting the stop loss at this point and why I'm setting a TP at this point.
Right.
I always make sure. Okay, for instance, there's this rate here. I saw this. I don't know if this is going to work out, but I noticed this one today. This one, because I think I shared this with you guys the other week. This was something we had here. We had this break of structure to the downside. This was a break of structure to the downside on the weekly time frame at this BOS, here to the downside. So I know at least, for instance, price is going to be bearish. You understand? Because I think we had all these buys. We took all these buys here. All these buys. We took all these buys. All these buys. Even this one, we took all these buys. Yeah, all these buys. Even this buy here, we took this buy. And we're expecting a rejection somewhere around here, but it didn't work out. So price broke to the upside and came back, retested with this one, move up. So this was what I was looking out on this next week. This is 1 week. This smallest candle is 1 week. This took 1 week to form. So you should understand. So price came here and I wanted price to actually start a good storyline here. This was first touch here. You can still refine it to this tip here to our side. So I wanted price to break this guy. Yeah, and I think price broke it. This and what I had was I had this new A-shaped key level here, line chart, this A-shaped key level here. Let me take this guy up. I had this new A-shaped key level which I marked, and what was funny was that I had liquidity closer to it. You get that liquidity closure. So I'm expecting price to actually come tap here and we have to move to the downside if it works. But now let me show you guys how I got. I already had let's say I already had my entry. This on the daily time frame. I already know price come to this sharp edge right here. Can you see I'm expecting price come? So now how did I calculate my stop loss? And I'm targeting this guy. How did I get this stop loss? H4. Let's see H4. This was the guy here. I cannot refine going to down. I cannot refine going downwards because this was my daily. I can't refine going down. I refine going instead opposite. If you're expecting price to go to a particular direction, you don't refine going to that direction. That means you're going towards stop loss. You understand? You instead refine going against that direction. So if I'm expecting a sell, I'll be refining going up. So this was the direction on the daily time frame I had. So this other one here as my entry was because I went again lower and I had my SMC. I had this SMC stuff here, which was we had this break of structure, we had a sweep. This guy making this high protected. Can you see? I didn't mark it out, but let me mark it out. You should see why my stop loss is there. Can you see why my stop loss is here now? Because this guy is protected. We call this a protected high. Can you see? And this was my original H1, my original daily time frame entry here. Can you see? So now this was my liquidity I marked, and now I had sweep, I had broke of structure. What I'm expecting liquidity and expecting price to come back to this zone here, tap here, and I have this move to the downside. And now where am I putting my stop loss? If as far as I've gotten if you have watched the SMC videos, you see whenever we had this, something like this, a sweep, a break of structure. This sweep signifies this sweep here, this one. It simply tells us this guy is protected. This is a protected low. This low, we call this a protected low or a strong low. You understand? A protected low is strong. I mean, price majority of the time we don't expect it may come, but we don't actually expect price to come back to this low. You get, so what will happen if we have liquidity closer here, price will break structure again, price will come back to this QMR taps here, and we have this move to the upside. So whenever we have price coming back to here, it means we're not having this liquidity. There was no liquidity here. That's why price will come sometimes and sweep this guy. Price will come and sweep this guy. Use it as use it as liquidity and move to the upside. That's pure SMC. But whenever we have liquidity, you see price will just come 50% retracement, sweeps liquidity, taps into this QMR zone, and other block here, one other block here, and we have this move to the upside. So that's simply what I did here. So I always put my stop loss above the protected high because I don't want price to come to this protected. All these videos are in that in that group. Since we started trading SMC, we have everything there. So my stop loss above. Can you see why my stop loss is here now? Above this zone here, because if price actually comes here, taps, I don't expect price to come. If price comes here, that means this setup was actually very wrong. Okay, it was actually very wrong. But I have my key level, everything from the daily time frame. I have this key level here, and I have this my liquidity. This is my liquidity here. Are you understanding right now? I hope it makes sense.
Yes.
All right, all right, all right.
Yes. Thank you.
So that's just simply how I do it. Sometimes I just want, if I, okay, for instance, if I have a QMR, you get, if I have, I told you guys for confirmation, we always have this QMR set up like this. Price is coming down to this guy. Price is coming down here. You understand? If let's say for instance, let's be really right. We have price gave us this here as liquidity. Price gave us here as liquidity, then broke structure, and liquidity is closer to this breaker block here. Price comes here, taps here, and moves to the upside. Oh, my stop loss, I'll put my stop loss now below at this QMR here. You get, I want to put my stop loss below at this QMR here. But if I'm seeing that, okay, maybe this QMR entry that is going to be my entry, for instance here, this QMR is going to be my entry, then my stop loss is going to be at this protected low, below the protected low here. Yeah, it's going to be below the protected low. If my entry is going to be at this protected low, my stop loss is going to be far more below this one. Yeah. So that's just it. But now, as I was saying something, price must not, you don't expect price to come exactly at your entry, tap at your entry and just go. You want to monitor price when price comes to your entry, my guys. You want to always monitor when price comes to your entry. Unless you're setting buy limits, you're a buy limit type of trader, you're not always on your phone. That's understandable. But if you're always there, you don't just wait for price to come to your zone and you start entering. You want to always see price always come and do this 1 minute confirmation. I don't mostly use it at times. If let's say price always come and do this stuff. It's 1 minute confirmation. You understand? Where it breaks this structure, it sweeps, breaks structure, comes back 50% here. This way you're entering at this 50%. Most like millions of people use the same confirmation as entry when price is already at your POI. And there was a time I taught you guys how to use the Heikenashi candle to confirm. Let's say when price comes to your that was on the 15-minute time frame. Price comes to your entry, use the Heikenashi to start taking your confirmations. But now the funniest thing is no matter how all your confirmation, if price is not going to go to your direction, it's not going to go to your direction. That's why I really stop these stuff of lower time frame. But I still use my lower time frame confirmation because if price gets into this POI, I'm on this chart, right? I always want to look for either I look for a bearish engulfing. You understand? I want to go 5 minutes or 15 minutes. I want to see this bearish engulfing. This one should engulf this candle. After this candlestick is done, you see, I'll start entering now it with any reversal that I find here. The price start reversing after this engulfing, the next candle may start here. It may come back behind here. What will I do? I'll enter now. When it's 50% here, I'll enter at this point and I'll see price now react and move to the downside like this, leaving a wick behind. You get, that's how I always want to enter most of the time. Using this has like confirmations you can use on a 15-minute or 5 minute time frame. And the price is in your POI already. You can use confirmations like this. And price already in your POI. You get, Those are things you should always look out. Sometimes price will come to your peer and even come and tap your stop loss here, but still look for that confirmation because it's valid. You understand? Still look for that confirmation because it's actually it's valid. It's valid. Any other question? Any other question? Please don't write on my screen. No question. Share your worries if you have any worry. That's why I'm here. And that's more
Okay.
reasons why I always use I use the volume chart and all those stuff, those other flow charts and volume profile. Just for confirmations. You get I may have an A plus setup. This setup, you see this setup? Yeah, you see this setup. I may not take this setup if I check on my footprint chart and it doesn't give me what I want to see. I won't take this trade. There was a trade I showed you guys. I told you guys it's going to hit stop loss. That was in this channel. I think I shared it. Then I told you guys this trade to hit stop loss. And it did actually this one. Mm, It's my private chart. I told you guys it hit stop loss, which was maybe on your I think I shared the chart and I told you guys that trade was not going to work out. I don't know if it was USD JPY. Let me see. Surely USD JPY. USD JPY FXCM. Forex.com USD JPY. I think yes, it was USD JPY. This was a trade on USD JPY. I think let me show you. I started the storyline two on this one and I got it clean. I think this was a storyline here. It was a storyline two on this one. Let's check it out together. Weekly time frame. Can you see? Weekly rejected weekly. Another weekly. Look at all these rejections. These are starting of storylines you could actually take and catch all these moves, all these gigantic moves on the weekly time frame. Another one, you could catch this one, catch this move, you could catch this one, catch this move, you could catch this one. This is a new move that started. So when a new move has started like this, what do? You just go on this. You can continue all these buys by doing what? Go on a daily time frame and use your normal understanding, like you're waiting for price to break any of these structures, price to break any key level and come back to that key level. You understand? Look for your storylines again on the daily time frame inside here. You can start it or you expect price. If anyone is closer to liquidity, wait for price to come there. So weekly time frame, we had weekly rejected this one, closed above. Then I think let's check 4 hour time frame. That's two time frame lower. We had this. It should be on the daily. We had this break of structure here. And what happened? Price came, but we had liquidity. So liquidity closer to this one. And I think this was my original point here. This open close, which was closer to this liquidity. Can you see this open close was closer to this liquidity? And what happened? I refined, I refined. Lower. There was no, I think, okay, I brought it surely down to this guy here. And I went again to 1 hour time frame. Let's see what we had on 1 hour, 1 hour, 1 hour, 1 hour, 1 hour, 1 hour. 1 hour, I think I refined again to this guy. Yeah, guys, the refinement. Price came tap, swept liquidity, went to the upside. Where was my stop loss? Below this open close here. Can you see this was the open close here? My stop loss was below the open close.
I
So
got a
I'm always
question.
Yeah, you can ask a question.
Sorry to interrupt. But
Yeah,
this is where I get confused. Like, you see, you refined it on the 4 hours, and you have a point that's really close to the 1 hour point where you refined it to on the 1 hour, right? They're
yeah,
really close.
yeah.
How do you have the patience to wait for it to come to this 1 hour point? Do you take a trade on the 4 hour point and also take another trade on the 1 hour point, or you just wait for the 1 hour point to be tapped?
All right, so this is what you actually see. Let me show you what you actually see. Let's replay this explicit here. You get this is what you actually see. Price hasn't gotten to any point here yet, right? Price hasn't got to any point. Let's take this off.
Hmm.
Let's take this off. So what happened? So what happens is we've gotten this right. We have something, we have liquidity here. Well, which point are we looking? We're looking for a point closer to this liquidity. We have the break of structure. We're looking for any point closer to this liquidity. We can't come and start looking at this point here. This point is too far away, right? So we want to look for something closer to liquidity, much closer to our liquidity, which is this open close here. You understand? This is much closer to liquidity. So what do I do? This is on the daily time frame. I can't take a trade on the daily time frame. Understand? That's risk. So I want to take my trade, let's say 15 minutes, 1 hour. So I will refine to that 1 hour. Are you with me? I want to refine to that 1 hour of 15 minutes where I want to take my trade, or even 5 minutes or 1 minute. You can refine right to the 1 minute time frame. Just to have an exact sniper. Sometimes price you may refine until price will not come and reach where you've refined. It's very, very possible. So what do? I go to the 4 hour time frame. On 4 hour time frame, I'm saying, okay, this is where I'm targeting right from this point. I'm targeting right from this point here, right? So what do? I can't just make all these zones here. I have a fresh key level. This is a fresh key level here. Why is it fresh? Because tab became unfresh, cross with this one, became fresh again. I explained why this is fresh. So what do? I just bring it back to this point here. I bring it down to this guy here. It's closer to my key level. You understand? I brought it to this guy here. So if even no matter what price will come me to this guy because this is the most recent line chart. Can you see? Recent
Hmm.
online chat. So what do? I will go another time frame, lower 1 hour time frame. What am I looking out for? 1 hour time frame. Again on 1 hour time frame, I will see something here like another liquidity because where am I? Why am I seeing this? I have a break of structure here. I see I have a break of structure
Oh.
here. And now price have broken structure here. This liquidity, can you see? Liquidity. After break of structure, first pullback is liquidity. We know that break of structure, first pullback liquidity. We have a new liquidity here. So now, what am I targeting? I can still decide to hold this zone here, but I have this one. It's fresh because of this candlestick. I have this one. It's fresh. Are you getting?
Okay.
So sometimes I
Yeah.
will choose to like, even though over refining, you may miss the entry because price may come and just use the first one you took. So, but I may
Right.
choose sometimes I bring it to this guy here. Sometimes I will choose like, okay, let me just be decent and bring it to this one because if I turn
Mm.
online chat, I will see that this guy is present and the secure MR here. So actually, price may actually want to come right. This is also an open close on the 1 hour time frame. And you may even test
Right.
this open close, it gives you an SNR on 15-minute time frame, but it doesn't mean price will come right there. And you now see, I'll come now to this guy, I'll be like, all right, so whatever happens, I know, I know I'll have something here. And where should I put my stop loss? Below this guy. Yeah, or I can still choose and put it below here, but that will be too large. So let me put it below this open close here. So you can mark out that open close too. And you place it below that open close. So mind you, that open close is also an entry where price may actually come back to this open close tab there. So if it comes taps here and it hit your stop loss, you didn't lose that trade. You
Right.
understand? You didn't lose that trade. So what will happen? We'll just watch price, plays out, calm down. You can see tapped again, and boom to the upside.
Makes sense.
Can you see how basic it is? So refining is not like you're not waiting. You're just seeing what's happening exactly on the chart and you're just analyzing yourself. So this was what this 1 year, this straight year. Why did I take an that's why I told you. I may actually take losses just on continuation trade, but when it comes to starting a storyline, that's impossible. It's very difficult. You understand? So what happened here was I saw price have broken structure. Can you see this broken structure here? So you cannot determine forex. Forex is going to show you something. You can't really know where price is going to. You understand? Because we don't control the algorithm. Everything, sometimes I will see somebody will post their losses and ask me why this was perfect, everything was good, why did it hit stop loss? I'll be like, you can't control the market. Market has its way it functions. You get. So what I had was I had this key level here. You can see this is a valid key level, and liquidity closer. And what happened? Price actually came to that key level, tapped there, and I told you guys before it was coming that this is a good setup. But I've checked on my VWAP and all those stuff. This was a poor low. It was a poor low here. I think I explained this was a poor low here. So this trade might not hold because of that poor low. So I didn't care about banking on it. So what happened? Price came tapped into a key level, made as it was going up. And you can see start storylines here, man. You can see start storylines. If not, storylines is just the break of structure and all those stuff, right? So what happened? Price came back, continued down. Look for a more suitable zone here, more suitable key level. We can check on the higher time frame. We can spot it. I think this open close, it didn't come to open close, but maybe respecting this other guy here because this guy is fresh. Can you see this guy is fresh? So higher time frame will tell you the story. Can you see on higher time frame what happened? Price came back to this guy here. Can you see tap here? And we had this move to the upside. So this guy is gone. And what happened here again? We have this open close here. Can you see price came back to this open close? Price have broken this open close because this open close was where price would actually tap here and reverse. But what happened? Price broke here. Hold on. I just leave you guys down. Hello? Yeah, hello? Right. Hold on a sec. My TV guys down. It's okay. So now. Which guy are you looking at? The road is closed. Yeah. Yeah. This one, I noticed. You want shit? Right, I'm back. That was fast. We have just 4 minutes left. So sorry about that. So as I was saying, this was another stuff here. Open close key level. What happened? What could actually happen at this point here? If we replay price, you will notice this was a valid key level where price could actually react from. You understand? Price could actually come here, use this as liquidity, but even though this is further away, tap into this zone here, tap here, and we're to have a reversal. But this was what we could be really actually expecting. But we are having break of structures to the upside, right? So this may not like actually happen. So what happened instead? Price, if this fails, what will happen if this fails? That means something like this happened. It fails, price will come back to this guy here and move to the upside. So you always have two decisions to make. This was it. Price breaks, came back, tap to the upside. Can you see they move the reversal to the upside? So that's just how price works. That's just how it functions. So any last question, let me answer quick so like we could end this call. You can see this was what happened here. Actually, this is what happened here. And at this point, you could refine to the lower time frame to have a clear, more cleaner entry. Let's see, refinement, no zone actually here. But this open close base above, we can't refine going to the upside. We refine going to the downside because we're expecting a bullish move. So let's see which zone again closer to this. Closer, closer, open close, closer, open close. On 30 minutes, let's see. But I don't like using open close on 30 minutes. Let's see SNR on 15 minutes here. SNR weak low liquidity. So price came tap here, sniper. We had this move to the upside to TP. So if you're targeting TP to be here at the stop loss below. Can you see now? Okay, this is how I'm going to set my stop loss here. I hope you guys can hear me. I hope you guys can hear me clearly.
Yeah.
So this is how I'm going to take this. If I'm entering at this, where is at this guy here, this SNR, stop loss should be below this other SNR here. I see this low here, this low. I'll take the week. I always take the week. So stop loss will be below here. Okay, that's all right. Then I'll move here. Can you see? Simple. So class is going to end. If you have any other question, please, you can send it to the question channel and you tag me. I'm going to respond to it immediately. If I don't respond immediately, I will come any other time and I'm going to see it. I'm going to respond to it. I will never leave you on ready and never you have any worries. I will never make you stranded. So whenever you have any question, any worries, make sure let me know, tag me. Even if you're sharing your results, always tag me so I can screenshot and I see the mistakes you've made and I make sure I see everything. And I like the way everyone is progressing and it's really motivating. Thank you all. Have a blessed night. How do you place your feet tool from the break of structure to the higher low? Okay, Stella, we have just less than 1 minute, but I think next class we are going to have tomorrow. I'll have class with the one-on-one people. So I think the next class, the next general session will be maybe after tomorrow. I'm going to explain Fibonacci and break of structures and all this stuff. So have a nice time. Good night. Yes, I'll drop the video